Good evening. Ira Epstein with your SPDR ETF stock market wrap-up. And this wrap-up is for Tuesday, the 27th of May, 2025. And what an interesting day. You know, it was just on Friday where the market got jolted as the president put 50% tariffs on the European Union, only in the afternoon to rescind those until July 9th, seeing how negotiations go between the EU and the U.S. The problem the EU has, and I think you realize it, it's 27 independent countries. It's not like the United States. Our states are independent, but everything goes to where the federal government goes, all right? A state can't override what the Fed does. That's not quite how it works in Europe. In order to make something happen, all 27 members have to approve it. How do you get that done on trade deals when everybody has different interests? What they do know as a group is the president's not messing around. He will hit them all with 27%, and they see that. That's what he's hoping happens, and that's, by the way, what I think the trade negotiators see there as well. I haven't heard too much from Apple and/or the other phone manufacturers that are abroad that want to sell their phones in the United States with those upcoming tariffs. We had a lot of news today on consumer confidence, and I'd like to go there first. U.S. consumer confidence shot up the most in 4 years after going down near a 5-year low earlier this year, 2025. It shot up the most since 2011. I'm laughing at it because it's wild. And the cutoff on the survey was the 19th of May, but they claimed, this board that does this, that what took place is most of the respondents, half of them, came in by May 12th. So this doesn't even count the tariffs going on and off. But here's what's really happening. The market's getting wise to these tariffs on and off, and I'll come back to that in a moment with you. You get the Mortgage Bankers Association numbers at 6. You're going to get Red Book sales at 7:55. The Richmond Fed numbers at 9 o'clock. API numbers for petroleum will come out at 3:30 in the afternoon. And after the markets close, you're going to get Nvidia earnings, and you know that's going to be a market mover. What's leading this market to the upside right now? It's tech stocks again. So they have come alive. But a lot of other markets are going too. If you looked at Brinker, if you looked at Texas Roadhouse, a number of them are just running to the upside. And why? Because people are traveling. They're staying in the United States. They're hitting the road. This is a Memorial Day week. A lot of people are out with their kids, their family. They're gone. I called one of my good friends in Florida, and I was surprised that his granddaughter was over. And I said, what's going on? She's very little and so on. And he says, the kids are out for school. I said, really? And the 27th, yeah, we get out already because Chicago's not out yet. So everything's a little different where you go. But if you look at the ball games, you see the kids there at the Cubs games and so on. So you get a feel for what is taking place. And, you know, you like to look at that and see what it's going to be. Travel to the U.S. going to be down. People are very angry with President Trump, and they're staying away from America in many instances. All right. So, okay. And I would think traveling to Europe, I don't know how people are going to feel. One of my closest friends is in Poland right now on his first trip there. So I'll get a feel for him when he comes back. I think he's coming back Sunday or early next week. So should be interesting. Could be another Sunday from now. He goes for long vacations. So that should be interesting. I'd like to hear what he runs into. All right. So all the stock market up. Now let me get back to what I was saying about President Trump. Markets pick up on things. Traders look for any edge they can get. And right now, the edge that is showing up, the president comes out, big tariffs, and in a very short order lifts them. Now, he's done it enough times where suddenly you're getting people are going to go, you know something? I've been wanting to own this. I've been wanting to own that. Next time he does that, I'm going to buy the market. It certainly worked from Friday to where the market's up. I mean, you can't argue that. It's what's been going on. And until that pattern's broke, it ain't broke. That's simple. AMC, I don't know if we have that up here. Yeah, we do, up 77 cents. Remember what I told you 3 weeks ago? I said, now your blockbuster movies are going to come out. It'll probably drive a stock like this higher. I say it because I owned a movie theater. I was the principal person in it, didn't run it, the investor. Never made money at it, by the way. So I don't mind sharing with you. Tried a lot of things they don't make. Every now and then you have things that do hit. That's life. And they're going to do fine. I mean, they got, what is it, Snitch, the Disney movie that made a fortune for them. The kids are coming in. Do you see kids going to a movie theater and not wanting candy and popcorn and all the goodies? I don't. And a kids movie, Disney's got this formula that if they get back on it, could work for them. And of course the Tom Cruise movie, but it's a 3-hour saga. That takes a certain person that wants to sit through a 3-hour movie. I heard today that Gen X doesn't like to be more than about just over an hour and a half in a movie. Interesting. You know, everybody does these studies to find out what's going to go on. The gold market should back off. The stock market's taking off, but is inflation going away? Is the 10% tariff going away? Do I think it'll be here during Trump's whole term? Yeah. Why? Because if he gets his tax bill, which that's going to be the big game, what's the Senate going to do with it, and then back to the House? A portion of that is that 10% levy on all goods coming in. How's he going to get the bill passed, and then pull that 10%? That would be a real trick, so I don't see that happening. Copper market, you got to keep your eye on China. Right now, things are good for China. With the truce between the United States and China, many companies that had goods are loading them up. I saw today on CNBC, they had one of the reporters in China showing you all the goods that were ready to be shipped in May that they couldn't do anything with. And she was showing outdoor furniture and the difference between what's made for Europe, what's made for America. Others, a lot of them are made for what? They don't have to worry about the rust of the sea. Others have to worry about the rust from the sea, and the pieces are made a bit different, painted different. So it's very interesting how that is all done. But I think that China's going to be on fire, having the factories fire up and get out as much product as they can before the sun goes down. That'll be the big question. In Rivian, you know, I've been saying I'd like to see a good break in this market. Well, we certainly had one today. And the market, you can see, has got lower highs, lower lows. It has come right down to the first support line. Often, the red line, the 18-day average of closes, is where markets go to figure out what they want to do next. I'd love to see this market fall even further into this zone. There's going to be a number where traders are just going to say about Rivian, forget price earnings, forget that. This is going to survive. I want to buy it at this level, and I'm putting this away in my portfolio. Maybe I lose $13 a share. But if it goes, I might be able to triple my money, double my money, and that's the type of thinking that I think a company like this is going to be about. I mean, their trucks are phenomenal. Stop an Amazon driver, ask him what he thinks of that van. I've read all the car magazines that have reviewed the van recently. People are in love with it, and it's not going to stay just Amazon. It's going to be taken. They'll have smaller vans coming out. They got a lot being planned, and they have money. Right now, at least. They made money for a quarter. Let's see if they can do it again. In Rivian, lower highs, lower lows. You can see it down there. I was looking over here going, what the heck's that popping up here? In Lilly, not yet. It's still got downside bias. It's got an embedded reading, I believe. Both numbers are under 20 right now. They were under 20 on Friday. They were under 20 on Thursday. You see what I'm getting at? So until this market loses that with the red line closing over 21, that is when I think the market gets a short covering bounce. Wherever that 18-day average is, that could be a target. When I look at AVGO, which is Broadcom, the embedded reading. So I think these areas are still being bought. Each of these breaks, there's a moving average that in my subscriber videos I show. I don't show it here. That's the average I think that they're buying at. And I think they're looking for the market back up at the Bollinger Band, but they'll bail if the red line closes under 79, in my opinion. Doesn't mean I'm right. In Google, coming back into all the resistance. We've been in an uptrend. The market has been in an uptrend for a while now. It all began with this low here, and then it's fed its way into the bands, coming back into the moving averages. But I teach that when a market's overbought, let somebody else go in for that. There's better places to put money. In Nvidia, it continues to just surge. You know, we're all watching Nvidia. They keep buying good shows. That becomes the fun of it. They get some things now that they're trying to get into areas that used to be on public TV. We'll see how that works. But higher lows, higher highs, still bullish until you lose the embedded reading. The resistance, to me, is crystal clear. It's the upper Bollinger Band. Right now, it's 1218 and a fraction. In Robinhood, all this volatility makes for trading, and making for trading gives you volume. Giving you volume is profitable to Robinhood. New influx of capital, they make money on some of that. So you can see how this market continues to go. And I'm going to repeat, you have market after market that's embedded now. When you see those red lines close under 79, the odds favor that is the beginning of a correction, most likely back to the closest moving average, main one, under the markets. In XOM, still bearish. Oversold, not telling traders to deploy money on the short side. You hit the Bollinger Band back on Thursday. Time to walk away. Let's see what the market does after that. SOX, no trend. Lower high, lower low, came into the support level, and that's what it should have done when it lost the bullish embedded reading. The odds were this market was going to come down here. Take a look at the videos. You were up in this area here. Watch. And the very next day, I said, this market's probably going to go at minimum to the green line, the 100-day average, very possibly the next line, which is the 18, and you tell me what it did. And that's where you're at right now. Makes perfect sense to me. In XLF, lower highs, lower lows. Same thing. When you lost the embedded reading, you pulled back. I don't see anything in the financial services here right now. I see a higher high, lower low. It's interesting that the correction just carried to a combination of the 100-day average and the 18, and it held. But this chart isn't screaming to me, hey, you're going to miss a trade if you're not in it. In XLI, how many of these markets got hurt on Friday when that market plunged because of the president's tariffs on the European Union, and how many of them now recovered? I mean, it's yin-yang with this president. The energy sector, still bearish. The market's fighting resistance at the 18-day average of closes. Momentum was coming down. It's sort of flattening out. The risk on the trade would be back to about $5 over, as I see it, this last rally high. And you got to be a little bit careful right there. I think that high is 85.85. So from here, it's about $3 is what it is. And if you're right, I was looking at the trade, do you go short? It's a $3 risk to the upside. Maybe you can pick up $3 to the downside. I like better odds than that. In GLD, this is where the market's going to fight for its support. Now, if it takes out a 302.10, you step away from the uptrend. Doesn't mean you're bearish. If the market can start clearing today's high, you'll probably catch some buying in the market and would stop still under that low, and traders seeing, can they get anything going on it? As I see it, the trend is up, the bias is up, and the market's holding its key support level. In the silver market, trend up, bias up, overbought as can be, keeps hitting the Bollinger Band and getting thrown back right after it hits it. Copper market, stronger. These are the miners. This isn't copper itself. And the copper miners, you know they're going to be running at a deficit for a long time. And if the world can get by and Trump can figure this whole thing out and get us into the second half of the year where the tariffs settle in, the economy start growing again, this could be one heck of a market. In BND, lower low, higher high. I see the argument for the resistance at the 100-day average in green and the 18. I don't see a trend in this market. The dollar has been down, but so oversold, be very cautious, and that means the flip-flop is happening in FXE. Want to remind you, one of the things you might want to take a good hard look at is the free offerings that we have at IraEpstein.com, be it from the courses, the booklets that we have, the charting software, the special reports that we issue, the price counts to give you an idea every day, a different market we focus on. Where do we think that's going? You get to see them. You don't get to keep them unless you have an account with us in some way, shape, or form. So think that through, but you might as well see what we have. IraEpstein.com, free offers. Hope you take advantage. I'm Ira. I will catch up with you all come Wednesday. Take care.